a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. The U.S. pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. Oil higher as that geopolitical situation puts a floor under prices. Gold also hitting a record, and copper approaching $12,000 a ton. And U.S. Special Envoy Steve Witkoff says the U.S. and Ukraine held, quote, constructive talks in Florida. So let's take a look at those markets. It seems to be a risk-on liquidity wave as we approach the year end. Obviously, you had those massive gains Friday, helped, of course, by Micron coming out with earnings. We have futures pointed higher once again today. Now, we are going to flip into positive territory for the S&P 500. If we stay there, that'll mark 7 months of gains for the S&P 500. We're still lower on the month for the Nasdaq 100, but 2 nice days of gains, Thursday and Friday, about 2.8% in total, brings that loss to very close to neutral. So we might actually see that flip into positive territory today. And Russell 2000 futures also up 0.4%. Let's look at the bond universe, because we've been seeing yields rise globally. Obviously, the Bank of Japan hiking has Japanese yields higher. In Australia, we have the 10-year yield up 50 basis points in the last month. And look at that 10-year yield up to 416 and change once again, up another basis point in the session today. The 230 spread, by the way, is at the highest since early 2021. Let's take a look at some metals as well, because we're seeing really across the board gains here. Crude oil, obviously, on the Venezuela story, up just a few cents. Gold above $4,400, and copper really trying to get to that $12,000 a ton mark. All right, it's time to look at some individual movers. Let's head over to London now and to Lizzie Burden. Lizzie.
Hey, Vonnie. Well, we start with Clearwater Analytics. They're up 7.3% almost in the pre-market. This on the news that Permira and Warburg are going to buy Clearwater for $8.4 billion. Next up, we turn over to the news that Datavault AI has announced issuance for 2 foundational US patents, advancing their blockchain-driven content licensing and tokenized monetization. So Datavault here up 34% in the pre-market. And finally, the story on robo-taxis. Uber and Lyft teaming up with Baidu to start robo-taxi trials here in the UK. You've got Uber up 1.1% and Lyft up 0.7% in the pre-market, Bonnie.
Exciting stuff. Lizzie, thank you so much. That's Lizzie Burden there in London. And coming up this hour, we're going to speak to Sophie Hyunh, portfolio manager and strategist at BNP Paribas Asset Management. So the U.S. ramping up pressure then on Venezuela. The Coast Guard has intensified the oil blockade as it pursues a third tanker. The geopolitical situation driving oil and gold prices higher. Let's go to our team coverage now with Bloomberg's Kasia Klimaszinska and Alaric Nightingale. Thank you both for joining. Kasia, what is President Trump's ultimate goal here with Venezuela?
It's clear that as we head into the end of the year and the new year, Venezuela is the top focus for the Trump administration. President Trump has his top people, the Secretary of Defense, Pete Hegseth, and also his Homeland Security Secretary, Kristi Noem, focused on this objective. The Trump administration is saying that it wants the Maduro regime to stop supporting the flow of illegal drugs into the U.S. and stop collaborating with terrorists. So it's reaching to the oil market, as you mentioned. The U.S. is pursuing a third tanker after seizing 2, trying to basically stop the flow of oil out of Venezuela and therefore depriving it of its main source of income, main source of foreign currency and cash.
Yeah, Alaric, can I come to you on that? Venezuelan oil is getting stranded at home for the most part. Can you put some numbers on this for us? How much does Venezuela produce? How much is getting out of the country right now?
Well, it's been severely curtailed. Normally, Venezuela's exports probably somewhere around about the 500,000 barrels a day mark, which is less than 1% of global supply and demand, but that's still an important number, and it's a number that maybe the market wasn't fully ready for when this campaign began.
Kasia, how far is President Trump willing to go here, and can Maduro withstand more vessels getting blockaded?
We might find out as soon as today. President Trump has an announcement on his schedule for 4:30 p.m. in Palm Beach in Florida, where he is for the holidays. And the Secretary of Defense, Pete Hegseth, will join him. We know that the U.S. has designated or sanctioned a lot of other tankers. Basically, it says that the oil flowing out of Venezuela is under sanctions and therefore should not flow to other countries. And President Trump also floated the possibility of some sort of land strikes. He hasn't given any details on those yet.
Alaric, it seems that some Venezuelan Navy ships did accompany at least one vessel, but then broke away as it approached international waters. What do we know about the Venezuelan Navy and what kind of capabilities it has to protect some of these vessels, should it be necessary?
It would be quite surprising if they truly did intervene in a way that broke this kind of... It's really a partial blockade because it's still possible for some oil, particularly Chevron's oil, to leave the country. But it would be very surprising if it had enough resources and enough will to truly block this blockade. Obviously, this ship is being pursued, but I don't think it ever went to load oil. It probably went towards Venezuela, turned around. So in many respects, the job has been done. They don't necessarily gain a lot from seizing an empty tanker that was going there anyway. So there is already a win for the US in having chased this tanker away and made it not go to Venezuela in the first place.
We're seeing a little bit of a premium in oil prices, about 1% or so today. Alaric, what is the worst case scenario that analysts are plotting out if Venezuelan oil was just off the market generally?
I don't think that people are super bullish about Venezuela because it is, it's not meaningless. 0.5% of global supply is not meaningless. But at the same time, we're moving into a period of quite significant surplus. The market widely expects to be in a big global oversupply. Therefore, there is a bit of latitude for the US to do these kinds of things and maybe just turn the valve slightly tighter in terms of global supply. So if you really did lose a lot of Venezuelan supply, I'm not sure that you go super bullish just because of this. The IEA, in a kind of a purely models-based assessment of supply and demand, expects there to be a surplus of about 4 million barrels a day next year. Now, that probably won't come to pass, but it's still going to be a big surplus, and so there's still a bit of room to manoeuvre.
Kasia, can I ask you what Congress thinks of all of this and if there's a possibility that Congress might make a move at some point?
A very good question. So lawmakers on both sides of the aisle called Pete Hegseth and Marco Rubio to testify, asking them to explain the situation. There have been voices of criticism saying that other attacks, the attacks that President Trump and his administration performed on boats carrying people and, according to the Trump administration, carrying drugs, that those attacks have been illegal. So lawmakers have been asking for briefings, and they did get some behind the closed doors. But it's unclear how much more they can do. The Trump administration is allowed to impose sanctions on, as it has imposed on PDVSA, the Venezuelan oil producer.
Can I come to you on some of the other metals rising? How much is that correlated with this oil price rising, or are they very, very separate stories right now?
I think there's probably a geopolitical aspect to it, but oil has its own supply-demand dynamics, and all of these markets have their own supply and demand dynamics. So from a geopolitical aspect, yes, everything is kind of interconnected. But as I say, every single one has its own sort of important drivers. And that's why oil, despite being the thing where the supply is more directly impacted, is up by less than some of these other commodities.
Yeah, for sure. Thanks to both of you for all of that context this morning. That is Bloomberg's Alaric Nightingale there, and of course, Kasia Klimaszinska in Washington. Turning to the Russia-Ukraine war now, U.S. Special Envoy Steve Witkoff saying the Trump administration held, quote, productive and constructive meetings with Ukrainian and European counterparts in Florida over the weekend. Joining us now for more is Bloomberg's Oliver Crook. We seem to be hearing this word constructive quite a bit. Ollie, what does it actually mean in this weekend's case, at least, that we know of?
Yeah, it's hard to tell what it actually means, Vonnie. I mean, we have this sort of attitude by the Ukrainians ever since that horrible meeting between Zelensky and Trump back in February that basically there are no bad ideas out of Washington, D.C., and that anything that the Trump administration tries to push forward, you basically need to say is constructive and is moving things forward. That being said, we can say that the Trump pressure that he's put on the Ukrainians, on the Russians, has borne some fruit. We have seen some areas willing to compromise, it seems, in ways that were not really talked about explicitly until really a couple of weeks and months ago, and I suspect suspect most of the things that the Ukrainians and the Russians are willing to compromise on, they're not willing to talk about quite yet in a public display. So what we understand is the talks over the weekend were sort of held separately between the U.S. delegation, the Ukrainian delegation, the U.S. delegation, and the Russian delegation. We understood that the United States also put forward the possibility of a trilateral meeting between the emissaries of Ukraine, Russia, and the United States. Not clear that we're quite yet at that point, but that's sort of where things sort of stand ahead of, that Christmas deadline. I suspect is one that we're not going to meet in terms of having that meaningful progress in trying to find the end of the war between Ukraine and Russia.
Yeah, and then in terms of funding, Oliver, Europe in the end decided to advance a loan to Ukraine as opposed to using frozen Russian assets. What kind of a message are analysts saying that that's sending?
Yeah, Vani, there's a lot of different dimensions to this 90 billion euro loan to Ukraine. And I think just the first one is basically that was necessary to keep the Ukrainian war effort afloat. Basically, Ukraine was going to run out of money in the first quarter. When I spoke to Zelensky just about 6 weeks ago, he said that getting that loan to the Ukrainians was a matter of survival for them, that basically the Ukrainians would be forced to surrender because they'd ran out of money by the first quarter. Now they have much longer runway, that 90 billion euros, 100 and some odd billion dollars, that will allow them to fund their military 2/3 of the way for next year and the year after. So from the standpoint of actually just continuing fighting, it's absolutely essential, but also the standpoint of being at the negotiating table and having any kind of leverage with the Russians, absolutely monumentally important. And in terms of the 90 billion euro loan itself, going from joint debt and backed by the European budget, not from the Russian asset, that was also of really great importance and was very interesting in terms of the sort of political intrigue between the Europeans, between Friedrich Merz and the German chancellor going into that meeting, saying basically there is no plan B to taking the Russian assets. And by the end of the meeting, basically signing up for joint debt at the European level to back this loan, a really monumental move. And I don't know that we would have got there if we had been talking about joint debt openly coming into that meeting. But after 18 hours of negotiation, that's where we landed.
Ollie, Putin has said that he would take steps in the courts, some jurisdictions somewhere, if Europe were to take some frozen Russian assets and give them to Ukraine for some reason or use them for reconstruction. I mean, is there a jurisdiction that would hear that internationally?
I mean, I think it's complicated to tell because, again, with all of this stuff, many of these things are being dealt with arbitrage in terms of third parties and some of the corporate issues that are trying to be worked out between companies who have stranded assets and all of those sorts of things. I think for the Russians, in the lead up to that European leaders meeting, what they wanted to do is make a lot of noise about the assets, make a lot of noise about the pain that they could bring down to the Europeans and the difficulties that they could put ahead for the Europeans. And depending on who you ask, they were pretty effective at making that happen. I mean, I spoke to the U.S. NATO secretary, the ambassador to NATO, a couple of weeks ago ahead of this. And really what he said is in terms to figure out what is actually hurting Russia, what is putting pressure on Russia, you find out how much they're complaining about something. Leading into that meeting, you heard them talking a lot about the Russian assets, the possible downside for the Europeans. And as close to as we get from sort of euphoric comments from the Russians, we got after that meeting when the Europeans decided not to take those assets. So we still think that that is a very sort of very present pain point potentially for the Russians. The Europeans did not have the risk appetite to seize it, but the only sort of silver lining to not moving on those assets on Friday means they're still on the table to potentially move on in months and potentially years to come in case the Europeans want to add additional pressure. And it would be helpful to get the backing from the United States, which we know didn't want the Europeans to take those assets.
Ollie, thank you so much. Bloomberg's Oliver Crook there for us. Now to other top stories trending on the terminal this morning. Japan's chief currency official sent a warning on recent foreign exchange moves after the yen weakened against the dollar. He told reporters Monday that they're seeing one-directional, sudden moves following Friday's Bank of Japan decision. Japanese government bonds fell amid speculation the BOJ may need to hike rates more aggressively to curb persistent yen weakness. A group of private equity firms led by Permira and Warburg Pincus has agreed to acquire Clearwater Analytics in a deal valuing the company at $8.4 billion, including debt. Clearwater investors would get $24.55 a share for an equity value of about $7 billion. The transaction is expected to close in the first half of 2026. And the Trump administration has defended the decision to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed and then later restored. Deputy Attorney General Todd Blanche says it was done out of concern for Epstein's victims. Coming up, we'll hear from the ASML CEO on concerns over an AI bubble and how the company is benefiting from the AI boom. This is Bloomberg. is Bloomberg Brief. I'm Bonnie Quinn in New York. ASML is Europe's most valuable company and one of the most important companies in the global AI supply chain. Bloomberg's Tom McKenzie sat down with CEO Christophe Fouquet in November for an exclusive interview on concerns over an AI bubble.
Well, you know, when people talk about AI bubble, I don't know exactly what they mean. And usually I say there's two ways to look at it. If you look at the industry, I don't think there is a bubble. So the impact of AI on the industry is just starting. And the impact on the industry will be positive for many, many years to come. So there is no bubble. I think that the value of AI, the industrial value of AI is extremely high. And this will be developing over time. There's no bubble because, like I say, we're just starting. Sometimes people talk about a bubble in reference to the stock market because we have seen some company getting extremely high valuation as a result of the excitement of AI. There, I think what you will see is more players coming over time. So initially, a few companies were, I would say, very much the only winner out of AI. Because of the demand, because the industrial demand will be so high, we need more players. And you will see more and more companies designing chips, designing AI product, manufacturing chips, et cetera, et cetera. And that could create, of course, some change on the stock market. But, you know, the two are a bit unrelated.
Because that commitment, $300 billion just this year alone from the hyperscalers, maybe $400 billion next year,
yeah.
That translates into real orders for your kit in the years ahead. You start to see that.
Over time. And sometimes, you know, the last few months I used to joke with some of our investors because they told us, well, you know, 200 billion here, 500 billion here. I say, well, I still don't have the equation to translate those orders into order for us. And it takes a bit of time. But you're right, over time, that demand translate into cheap demand to our customer.
Yeah.
This translates into a need for more capacity, and this translates into demand for ASML and our peers in the industry.
The infrastructure spend from the hyperscalers and the kind of deal making that OpenAI has done, almost $1 trillion worth of deals committed just by that one company alone, which isn't making a profit this year. That makes sense to you?
Well, I think the investment makes sense overall because you cannot play in AI without investing in hyperscaler. And there may be even a few cycles of investment because the investment today is down on certain chips. The chips in 2-3 years from now, if you look at NVIDIA announcement, they will be a lot more powerful. And people may be tempted again in 2027 to invest again in hyperscaler to make use of those chips. So you have different cycles, and you have a bit of a arms race because if you don't invest today, you're out.
ASML CEO Christophe Fouquet there in conversation with Bloomberg Tech Europe anchor Tom McKenzie. Coming up, one of Elon Musk's old enemies joins the race to run GM. That and a look at what else is making headlines in your front page news. This is Bloomberg. Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Wall Street Journal reporting one of Elon Musk's old enemies is joining the race to succeed Mary Barra as CEO of General Motors. Sterling Anderson is a 42-year-old robotics specialist who clashed with Musk at Tesla. He joined GM in June as its global product chief, and since then, the Journal says, he's expanded his influence, taking over units that develop AI and integrate software into GM vehicles. Next up, the New York Times looks at a story that was pulled last minute from CBS's Sunday episode of 60 Minutes. The Times says the correspondent for the piece is criticizing the network's decision, calling it political. The piece on Venezuelan men deported by the Trump administration to a prison in El Salvador was pulled 3 hours before broadcast. And finally, the Financial Times leading with exclusive reporting contending Binance allowed suspicious accounts to operate even after its 2023 US plea agreement. The FT says Binance, whose founder CZ was pardoned in October by President Trump, failed to stop hundreds of millions of dollars of cryptocurrency from flowing through suspicious accounts, even after promising to improve its conduct in that landmark $4.3 billion US criminal settlement. All right, let's take a look at these markets as we head into Monday, the Monday of Christmas week. We're supposed to be seeing a Santa Claus rally, and indeed, there it is. Futures pointed higher once again today after 2 days of gains for U.S. indices. We're now flipping into positive territory for the S&P for the month, which would mark a 7th straight month of gains if it continues. The dollar is a little weaker today, way of strength in sterling after GDP data showed better business investment and a few other good pieces of news. Strength in the yen, too. That's after weakness, though, and verbal intervention. The 10-year yield up about a basis point. That's moved a few basis points in the last week. And take a look at commodities. We are higher across the board. Gold up 1.7%. We have crude higher on geopolitical tensions. And copper is determined to get to that $12,000 a ton mark. All right. Coming up, we're going to speak with Sophie Hyunh of BNP Paribas Asset Management on the outlook for 2026. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. The U.S. pursues a third tanker near Venezuela as President Trump intensifies the oil blockade targeting Nicolas Maduro's government. Oil higher as that geopolitical situation puts a floor under prices. Gold also hitting a record, and copper approaching $12,000 a ton. And U.S. Special Envoy Steve Witkoff says the U.S. and Ukraine held constructive talks in Florida. Let's take a look at those markets then. We have futures all pointed higher across the board in the United States after 2 days of gains, really egged on by Micron's earnings, but also it's just a risk-on week, and it is obviously a Santa Claus rally that we're seeing now. We've got lots of liquidity into year-end, the dip buying emerging once again. The S&P would flip into positive territory, assuming it holds today's gains. That would mean a 7th month of gains for the S&P 500. And the Nasdaq 100 might even wipe out December's losses today if these gains continue. Now, let's look at yields because we are seeing them rise globally. Lots of different stories going on there. Germany talking about strength into next year. Japan obviously may need to hike again. But here in the United States, we're also seeing a movement, particularly around the 10-year mark. We're up another basis point today, but we've moved a few basis points in the last week. And that 230s curve is wide. It is steepening 135 basis points at the moment. Let's take a look at those commodities because, again, a powerful rally really across the board. You can see crude up maybe on geopolitical tensions, but gold, though, above $4,400 an ounce. Copper up another 0.5%, really nearing that $12,000 mark. And platinum has actually topped that 2,000 mark for the first time since 2008. Let's get to some individual movers now for some stocks to watch. Lizzie Burden is in London. Lizzie.
Hey, Vonnie. Well, we start off with Clearwater Analytics. The shares up more than 7.3% in the pre-market. This on the news that a group of private equity firms led by Permira and Warburg Pincus has agreed to acquire Clearwater in a deal valuing the investment and accounting software maker at $8.4 billion, and that including debt. Next up, we turn to DataVault, and the AI company's secured 2 US patents, strengthening its blockchain-based content licensing and tokenized monetization technologies. That stock also up 34% in the pre-market. And finally, we're watching Uber and Lyft. It's a UK story, this one. The two companies teaming up with Baidu to start robo-taxi trials here in the UK. Uber shares up 1.5% and Lyft almost 1%, Vonnie.
I'll try it if you do. Let's put it that way, Lizzie. Thank you so much. That is Lizzie Burden there in London. Sophie Hyunh of BNP Paribas Asset Management says the rotation is underway. She writes this: the market is currently in a heavy stock-picking mode. The real money community seems to have started to position in the rotation. Sophie Hyunh is portfolio manager and strategist at BNP Paribas Asset Management, and she joins us now. Sophie, thank you so much. So what we're seeing right now, this Santa Claus rally, is it the typical rally that we see coming up to year end? Sophie, is it dip buyers emerging? Because it does seem to be in that AI tech space again.
I think it's, so if you look at what's happening, I think what's going to be different from usual dip buying is the macro story is somewhat changing. So if we look into next year in most countries, so except for the UK or France, the fiscal policy is going to be either expansionary or supportive at a time where central banks are going to be either still on hold, but hopefully easing if there's a need to be. So in terms of like the first half of the year, we could likely have a growth pickup, which could be supportive for rotating from the AI themes into much more of the cyclical laggards. And I think for the past 3 months, that's what's been happening across the board.
Yeah, I mean, the tech capex boom's still promising more productivity, but how concerned do we need to be about the labor market, particularly given the figures that we got, which, you know, albeit maybe not the freshest or the most complete data, still show a labor market that is weakening in the US?
So if you look at it, the Fed is priced to cut like twice next year. But at the same time, if you look at, I think your story is about like the K-shape in the US. I think to some extent it's priced to perfection. If you look at consumer discretionary, equal weight versus consumer confidence, it's never been so low. So the dislocation in the US economy is well understood, and I think in the price already. But if you look out of the US, what could happen is a better growth outlook. If you look at PMI's data, if you look at the OECD leading indicator, in Asia, for example, you see signs of green shoots. In Europe, where the new orders to inventory is also showing signs of pickup. I think hyper-focusing on the US makes sense, and to some extent, has the K-shape become too consensual at a time where the fiscal impulse is going to be positive in the first quarter of next year? And when the rest of the world, if you look at Europe, but also Asia, in China, you could be expecting much more fiscal support. The story could be even more further rotation out of the US into next year.
How does the US dollar play into this story, Sophie, particularly for, you know, that rotation trade? If we continue to see the dollar weakening, will we?
So I think it's quite ironic, as in, like, if you remember last year, the dollar call was super bullish. Early this year, the dollar call basically flipped around. And I think if you look at consensus, so I've been through all the sell side like outlooks, I think the dollar outlook remains a bit bearish, but I think there's a lack of conviction around that. But if you believe in the reflationary leg in the first quarter next year, if you think there's going to be the cyclical rotation ongoing, I think the dollar could trade more down than up. But I think there's going to be a lot of cherry picking there. So we still like the high beta currencies, such as the Australian dollar, the Swedish krona, where we think that the domestic story is also supportive. But overall, yeah, a bear dollar call.
Okay, so you're looking at, you know, the Norwegian krona, for example, as you said, the Australian dollar. What about yields? Will they continue to rise globally for obviously various reasons, but we're seeing them rise everywhere from Australia to Japan to the United States?
I think it's exactly the point. So I think what's quite, so if you update a common factor of G10 yield across each point of the curve from the 1 year to the 10-year forward, you basically see that the common factor is basically picking up. So I think the reflation and the cyclical rotation story I was talking about is somewhat starting to be priced. I mean, in Australia, the market is expecting already hikes next year, same for New Zealand and to Canada. But I think one thing that the market doesn't really take into account is if you have yield rising and if you have this reflation trade coming up, then what about inflation? For now, it's been really muted because of China exporting deflation, because the tariff have been less worse than expected. But if you believe in a reflation into next year, the surprise could come on the deflation front. I think to some extent that's why you know, commodities have been working well. That's what you've been highlighting earlier today, or basic resources equities. And to some extent, I don't think it's fully priced if you look at the price action of oil equities.
Sophie, what do you do going into the new year if you've, you know, taken some profit, for example, on the AI trade, and You know, you're talking about various points of contention next year, whether it's the Fed perhaps cutting twice, but we don't really know because we don't know who the next Fed chair might be, the Bank of Japan perhaps hiking more. Where would you put some money just for safety reasons?
So I think you need to have a bubble, as in like, I think the AI story is still going to be there. I think there's going to be much more on focus on hardware versus software. So we're still along the semis, we're still on Korea. But at the same time, in terms of like trying to gear to the right down risk of this cyclical recovery, which is the other side of the bubble, I think being long oil equities, basic resources, being long the high beta currencies, I think makes sense, like having this barbell portfolio as you head into next year.
And is gold still part of that next year, Sophie? I mean, we're at $4,400 now. Can that continue to rise?
I think you have structural support for gold. So I think it's well known. If the dollar weakens, gold is going to be supportive. You have central banks buying, but you also have, like Tether buying, which has been buying as much as central banks. So you have structural forces are still going to be there. It's going to act as a support for gold prices. But I think to some extent, if you think that yields are going to continue rising and there could be, like some contagion from JGBs, probably, I think gold remains this duration replacement you want to hold in portfolios.
All right, Sophie, thank you so much for that outlook into 2026. That is Sophie Hyunh of BNP Paribas Asset Management. Now to other top stories trending on the terminal this morning. President Trump's top economic advisor says a Supreme Court ruling against the administration's tariffs regime risks creating a major administrative problem. Speaking on CBS's Face the Nation, Kevin Hassett said the challenges of refunding the levies should deter the court from ruling that way. Hassett is a top contender to succeed Jerome Powell as Fed Reserve Chair. The Trump administration is defending the decision to pull several pictures from the latest release of documents related to Jeffrey Epstein. An image of a desk drawer with a number of photos, including one showing President Trump, was among those removed and then later restored. Deputy Attorney General Todd Blanche says it was done out of concern for Epstein's victims. And China hits EU dairy imports with hefty duties. Beijing says it will impose tariffs of up to 43% on some dairy imports from the European Union, following an anti-subsidy probe. China launched an investigation focusing on fresh and processed cheese in August of last year. Brussels later challenged the probe by requesting consultations via the World Trade Organization. Coming up, the U.S. ramps up pressure on Venezuela as the Coast Guard pursues a third oil tanker off its coast. Details next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Oil rising on escalating geopolitical tensions between Venezuela and the United States. Joining us now for more is Bloomberg's Alaric Nightingale. So, Alaric, there's definitely, obviously, a pop in oil. We're just seeing it about a 1% move at the moment. How much does Venezuela contribute to global supply?
Well, Venezuela is a relatively small supplier to the global market. It's probably around about 500,000 barrels a day, give or take. But 500,000 barrels a day, that's 1% of, well, less than 1% of global supply. But it's not nothing in a market that's pretty marginal. If you were to have that as a shortage, everybody would be very alarmed about it. At the moment, though, the market is in a big surplus, and I think that's why we haven't seen more of a pop in oil.
How much pressure is this currently putting on Venezuela's economy? Is it getting any oil out there? Is it getting any currency for itself?
That's a great question. I think that the shipments are extremely limited. Chevron is still in there. It's able to operate normally, it says. So there is a little bit of oil eking out. The sanctions are on, the blockade is on vessels that are sanctioned, and that appears to be causing a very significant disruption to exports. So the vast majority seems to be held up, and as we've seen, there have now been 3 vessels that have been either seized or pursued.
Yeah, Alaric, I mean, this would have come out of the blue to a certain extent to Venezuela. Is it able to get other ships out there? Who is it selling its oil to at the moment?
Well, there's very little Venezuelan oil moving. I think just maybe one cargo or two cargoes. So it's really the problem is that the oil is starting to back up in Venezuela. They're having to kind of put it in storage sites and so forth. So yeah, Venezuela's got a huge problem if it doesn't find a way out of this, and it's a very hard thing to get out of because what merchant ship wants us to go to a place where it's going to get seized? Potentially boarded by military people. So, yeah, it's a real challenge for Venezuela.
In previous times, was Venezuela exporting a lot of oil in terms of vessels, for example? Would it have been sending vessels out every day?
Yeah, absolutely. Venezuela is entirely reliant on, or almost entirely reliant on seaborne exports of its crude. They go all around the world, large amounts going to China, actually a large amount going to the US. So it's entirely reliant, and yeah, shipping it every day, or maybe sometimes missing a day, but yeah, essentially daily shipments, and that's being hugely stopped. And while that happens, what do you do with the oil? You start to put it in storage, and the storage starts to fill up.
Yeah, and that's what we're seeing. Alaric, thank you so much for the context. That's Bloomberg's Alaric Nightingale there. For more on this pressure on Venezuela, now let's bring in Bloomberg's Kasia Klimashinska. So Kasia, what is the ultimate goal here for President Trump? I mean, this is the third vessel that is getting blockaded now. Vessels have stopped moving, basically, from Venezuela. What will next happen?
President Trump has been very clear since he basically became the president. Again, he has consistently been increasing pressure on Venezuela, first by targeting boats that he said were carrying drugs into the U.S., then imposing this blockade on crude oil tankers coming in and out of Venezuela, and now basically implementing it. So the U.S. has seized 2 tankers, and now it's going after this third one. The objective here is to stop the flow of crude oil out of Venezuela, and therefore cutting any flow of cash to the country and putting pressure on the Maduro regime. It does appear to be very successful, as Alaric has mentioned. No vessel would want to come anywhere near the Venezuela waters, and so most likely the country will struggle to sell its oil. It may have to even stop producing because it will not have any place to put it.
How far is the administration willing to go? And I say the administration because this is not the U.S., right? Congress has not really had a say in this.
Very good question. So President Trump has an event today. He has left Washington, D.C. He's in Florida for the holidays, but he will have an event at 4:30 p.m. today with the Secretary of Defense, Pete Hegseth, and the Secretary of Navy. So we might learn more, but we know that Trump has made more threats in the past. He has floated land attacks, but they may not be needed because this crude oil blockade might be very successful. What the regime needs is money, is cash to flow its operations. If it doesn't get the foreign exchange, it will most likely see its currency plummeting and possibly social unrest.
Kasia, thank you so much. That is Bloomberg's Kasia Klimashinska. Coming up, we're going to set you up for this Monday trading session. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Let's now take a look at the state of the consumer and what's ahead for the global luxury industry. According to Bloomberg Intelligence, the luxury goods market could return to 4 to 5% revenue growth next year after 2 disappointing years. Joining us now with the latest is Deborah Aitken from Bloomberg Intelligence. So Deborah, tell us about the growth drivers for the luxury goods sector and why we expect them to improve next year.
Hi, so we're thinking about 2 years where we've seen really no growth in the marketplace and a lot of change, huge amounts of investment, and the different mindset of the consumer, but also of management. So we're looking at 4 to 5%, key drivers being pricing coming or being more muted. We're expecting maybe 2 to 3% pricing, which means that a lot of the tariff input charges and also the inflationary costs are are bedded in now for this year as we head into 2026. And also that the companies have been very astute in amending product and content so that some of the entry points are lower, as well as some prices having come down somewhat. So we start on a cleaner footing for 2026. There will be some pricing from tariffs in the first half, but a lot of it is already in spring/summer 26 in terms of the ticket price.
What about China sales, Deborah, and also travel retail? That had been suffering quite substantially.
Yes. So China, actually, we're looking at 4 to 6% growth for 2026. That's against big double-digit negatives again in 24, and then not even making parity in 2025. We're heading towards 7 of our 10 companies at the Q3 in earnings result came through with top-line revenue growth, 7 of the 10 biggest makers. So we saw, for example, Q3, LVMH moved from negative to positive, Hermes from neutral to positive, Richemont negative to positive, positive Prada, 4 quarters of growth in Moncler. So that's all feeding in, and we think that if we can start with some level of improvement, but that would be slight, that we could get to 6% growth for the full year in China. But again, that's on a lot of investment, which hasn't slowed down in the last couple of years, to try to make that work this year in China.
Well,
and travel retail.
Yeah.
Travel retail. So actually, if we look on a global basis at the 9-month, we're at 4.6% growth. And in Asia, we're at 8%. But we hadn't seen so far much movement in long haul. And a survey from BI in October shows that there's a 15% uptick in the next 3 months of an expectation of the Chinese traveller to move to Europe, which would be very positive news for the European makers of luxury goods, where, you know, a lot of their flagships plus smaller stores are held. That could be very positive.
Looking forward to seeing the results next year and to monitoring your reports as we go through 2026. Bloomberg Intelligence's Deborah Aitken, thank you so much. Now, let's take a look at what's ahead this week. Tune in to our interview with Fed Governor Stephen Myron this morning. That's at 8:30 a.m. New York time. Then we get the second reading of third quarter GDP tomorrow, Tuesday. And of course, markets close early on Wednesday. It is Christmas Eve. Let's take a look at some of those movers now, pre-market on this Monday session. Permira Warburg obviously buying Clearwater Analytics for $8.4 billion. And you can see that stock is up about 7.5% on the back of that news, roundabout where the cash part of the offer is trading. Datavault up more than 40% pre-market. It announces the issuance of 2 foundational US patents advancing blockchain-driven content, apparently, and licensing tokenized monetization. We'll see what happens with that stock at the open and after the open. Uber up 1.6%. Uber and Lyft teaming up with Baidu to start robo-taxi trials in the United Kingdom. Let's take a look at the macro picture now, because we have futures pointed higher in the United States after that nice ending to last week. Remember those 2 days of gains? How could you forget? Those companies that were moving higher, the Mag 7 and so on, they are higher in the pre-market. And then we're seeing huge movement in some commodities. Crude up 1.6%, but copper headed for that $12,000 a ton mark. Stick with us. Surveillance is next.